All right, welcome to another Forex session. Um, we're trying to get our trading set up for tomorrow, which is 29th day of June 2026. We're trying to just get it set up and wait for the market to open. The market will be opening in the next few hours, and let's be ready for the market. Okay, so we did our weekly outlook. The video is already on the channel, and we want to do our daily analysis in line with our weekly uh, outlook. I told us during the analysis of the weekly outlook to know the bias of the market, the bigger picture. And we discovered that the market is consolidating for some weeks now. And I told us that for us to trade this pair, we have to wait for the market to break out from that consolidation, which is what you are seeing. The market is consolidating between 186.377 and 181.850. So, and there's not much we can do for today than to wait for the market to open. Okay. So, but let's just see. I told us that I don't really like trading when the price is far from the major structure. As you can see, I will not be trading this. If the price is around this level, yes, I can trade. It's one of my trading rule. I don't trade the price at the middle of structure. Okay, but for those of us who scalp or who trade the market from every angle, let's see what we can uh, get from this pair. Let's see. Let's go to our line chart and get the closest structure. Okay, there's really not much. Let's say, let's have this. Let's have this. Okay. Let's have this. Now, I told us that if you want to trade well, you have to trap the price between support and resistance and wait for the market to break out from that level so you can enter a trade. And I also told us that before you enter a trade, you wait for a full price action retracement, then a bullish or a bearish engulfing candle or a weak rejection candle to take a trade. Now, I won't be trading this pair. Why? Because it's far from my major structure. I won't be trading this pair. But if you want to trade this pair for the 29th of June, being Monday, this is what you can do. You wait for the market to break from this structure. Okay. Now let me remove this. So if you want to trade this, it's quite easy. You just trap the price within support and resistance. You wait for the market to break from this structure, then give you a full price action retracement. Then you can target 1:2, 1:3, or target the next zone. That is one thing I can do for today. That's the 29th day of June. Or better still, when the market break, if the market break to the upside, give me a good level of retracement, then I can take the price to the next zone. So this is what I can do with this trade. Okay. Now, if you break to the upside, these are targets. If you break to the downside, these are targets. Okay, so what can we also see in the market? As you can see, I can see some level of head and shoulder pattern. The head, shoulder one, shoulder two, though not that obvious, but it's something to really consider. So that tells you that the market can break to the downside. But even at that, that's not actually enough reason for the market not to break to the upside, because as you can see, the market is trending up, and I believe I'm seeing higher low. Remember, when you see higher low, be careful to sell, because higher low gives you sign that the market want to uh, go to the upside. Okay, now this is what uh, you can do for the 29th day of okay, not too accurate, but just let it just be there so that it can give us some level of clarity. Now, what can you do when the market open in the next few hours and you see a break from this trend line and a break from this structure? Wait for a good level of retracement, a full price action retracement, not one candlestick retracement. There's a reason why I emphasize on this full retracement, because there are many traders, once they see a break of structure, you see them rushing into the market, and before you know, the market will just reverse against them. But if you wait for full price action retracement and wait for a bullish or a bearish engulfing candle or a weak rejection candle for confirmation, if you can trade this way, you will escape most of those fake out, stomp hunt. You will escape some of them, not all. You will escape some of them. So what is our trading setup for 29th of June? This is it. If the market break from this level, give us a good level of retracement, then we target this area, So your stop loss should be around this level. Okay. Then your stop loss should be, your take profit should be around this level. Then your stop loss should be around this level. Now this is 1:5. Yeah, 1:5. Now, if you want to put your stop loss at this level, please reduce your lot size. Now, I have a video on lot size and entry and stop loss. Please go and watch the video. Let me give you an instance. If you put your, let's assume the market break to the downside and you want to take the trade from this level, and this is your stop at this level. Now, and maybe you want to use 0.04, for instance. That's what you want to use to take the trade. And maybe you now decided, okay, I don't want to be stopped out. I don't want to be stopped out from the market easily. Maybe you now increase your stop. You put your stop somewhere around this level. Please make sure that you reduce your lot size. If you have a wider stop, use a smaller lot. So if you will be putting your stop around this level, please divide that 0.4 by 2. You can decide to use 0.02 instead of the, okay, 0.4. That was the initial lot. Divide it by 2 if you have a wider stop loss, so that you don't lose too much if the market goes against you. So that is the 2 level you can put your stop, either above this level. If you are putting it above this level, then do well to reduce your lot. But if you see some level of price action around this level, let's assume you see something like this, you can put your stop at this level. This is also very logical. So that is our first setup for 29th of June. The market break out from this level, retest the level, wait for some level of candlestick confirmation, bearish engulfing candle or a weak rejection candle, then you can take the market to the downside. But let's assume the market break to the upside, break to the upside. Now, if the market break at this level, I wouldn't advise you to take the trade. But if it do some level of consolidation and break at this level, now, if this happen, of course, you can take the trade. If it happens, now you target the next zone. Target the next zone. Uh, your stop should be the same principle applies. If you see some level of price action around this level, you can put your stop around that level. And let's assume you want to use 0.4 for your to enter this trade. Good. But if you want to increase your stop, please reduce your lot size by 2 or reduce it by some level of percentage so that you don't lose much if the market go against you. You know, the market will definitely do what it likes. Okay, so that is why you must learn to trade small so that no matter what the market does, you have enough capital to enter more trades. Okay, so these are the two possibilities for 29th of June. Okay, so I'll take it again. The market break to the upside, retest. You look for some level of bullish engulfing candle or weak rejection candle to the upside. Then you put your stop around this level. Then you target this level. That is 1:3. Okay. Then if it breaks to the downside, give you some level of retracement, and you look for a bearish engulfing candle or a weak rejection candle. You can take the market to this level. So this will give you 1:5. So either way, this is a good setup, and please just make sure you are trading small. Do your own analysis, and you can add 1 or 2 knowledge from my own analysis. This video is just for educational purpose. Okay, so that is the setup for EURJPY for Monday 29th of June. This is the trading setup. So let's see what EURJBP let's see what we can get from this pair. Let's look at our weekly bias. You know, we did our weekly analysis on this pair before today. Now, in our weekly analysis, we had 2 bias that the market can break through to the upside and continue to the next zone, or break to the downside and continue to the next zone. That is our weekly outlook. And like I told us, this pattern have the tendency to break to either the upside or to the downside. So we have to be to watch out for this breakout. So, but what can we do from the smaller time frame? Let's go to 1 hour and see what we can do to. Okay, now if you look at what is happening in the markets now, the market is just playing around this level. So what can we do? Remember, the first rule is trap the price against in between support and resistance. That is the first thing you have to do. Trap the price. It makes the chart look clearer. It makes entry look clearer. Trap the price between support and resistance. Okay, I think I'll take this level. This look like a fake out. Okay, now we have trapped this price between support and resistance. Good. So what can we do to this pair? Now, sit down and wait for the market to break out from this level. Remember, the market is just consolidating around this level. So wait, now this could be the breakout. This candlestick is a very good candlestick. It can tell that the market want to move to the upper side, or may just be a fake out. But if you check what is happening here, you can see some level of exhaustion. So if you want to trade this market to the upside, wait for at least a candlestick with big body. A candlestick with big body. This is break from the structure. This could be a deeper retracement. This could be a deeper retracement. It could be just a fake out, but I think it's a deeper retracement. So what should you be looking for? Now, the reason why I would consider this, or I may consider this as a deeper retracement and look for buying opportunities, because I can see some level of higher low. The market formed higher low. So higher low, and this is another higher low. So the market might still retrace back to this level to before continuing to the upside, or it might just break out from here and go to the upside. Either way, what are you looking for? You are looking for a bullish engulfing candle before you take this trade. A bullish engulfing candle, or a candlestick with long wick rejection. Let me give you an instance. If you see a candlestick like this is a good candle with momentum. If you see a weak rejection candle, like, let me show you something. I just want to give you the example of the kind of candle you should watch out for. Weak rejection candle. Okay, I can't really find any. But okay, now this is the opposite direction. You see the level of rejection, but this is the opposite direction. That's not what we are looking for. Okay, let's continue. But I just believe that, let me just hope that you understood what I'm saying. So if you see such level, now this one could have been that rejection, but the exhaustion is much. The exhaustion is so much. So that is why I can't really advise for you to start trading because of this uh, uh, price movement here. So that is one possibilities. Wait for a bullish engulfing candle or a weak rejection candle to the upside. Okay, I think I've seen something. Look at this candle. If you see a candle like this weak rejection with bullish momentum, if you see something like this or something like this bullish engulfing candle, if it plays at around this level, you can take a buy trade. Okay, you can take a buy trade. Why? When can you take a sell trade? When the market break from this level. You break from this level, unless you want to take your take profit from this level, but it is safer to actually enter the trade. Okay, I think I can put this here. Yeah. So now, when can you actually sell this market? You can sell this market when if you see the market breaking from this level, a full retracement, then you can target the next zone. Okay, I don't know if I believe this is clear. I think this is clear. So this is our trading setup for Monday 29th. This is our trading setup. So your first target is the trend line. Your second target is this level. Okay, so this is our setup for Euro GBP. So just watch the market. Remember, always drive the price in between support and resistance. Wait for the market to break out from either the resistance or the support. If you break from the resistance, then look for a good amount of of retracement. Please, full retracement, not one candlestick retracement. Then once you see that retracement, then look for a bullish engulfing candle or a weak rejection candle to enter a trade. Then, if it breaks to the downside, you look for a good amount of retracement, full price action retracement. Then you look for a, a bearish candle or a weak rejection candle to the downside. Now, if you are trading this, where is the best place for your stop? Let's now I would advise you to target this first area because the market might reverse from that area. Target the trend line. The 7 tendency that the market will reverse from this area. So if you are entering the market from this level, I believe your stop should be around this level. Your stop should be around 0.86084. That will give you 1:2.2. So that's a good trade. And let's assume the market break to the downside. Uh, you can target you can target 1:3, 1:4 or so. Then where can you put your stop? Your stop should be around this level. Okay, you're entering from this level. Remember what I told us previously. If you have a wider stop, reduce your loss size. If you have a wider stop, reduce your lot size. So if you want to put, if you feel so okay to put your lot size around this level, please make sure that your lot size, sorry, to put your stop loss around this level, make sure that your lot size is smaller than when you put your stop loss around this level. So these are the two logical places you can actually put your stop. So that is the setup for Euro GBP for 29th of June 2026. So let's watch out for the pair. Let's watch out for what the market will do. And let's see if we can see some quality entry to actually take a trade. So remember, do your own analysis and you can drop a comment. If you have any question or there's a pair you want us to analyze, just drop it on the comment section. Okay. Remember, this video is for educational purpose. So do your own analysis and do well to add one or two things that you can grab from my own analysis. Okay. See you in the next pair. And also, before I go, please do well to subscribe to this channel so you can get our uh, daily analysis before the market open. As you can see, the market will open in the next uh, 12 hours, but the analysis will be up in the next 1 or 2 hours, so you can actually have time to go through it and also go through your own analysis and come out with something very, very, very good. So subscribe to this channel and see you in the next pair. Bye.